Welcome to another episode of the Profitable Home Services Podcast. I'm Diane Gardner, your host, and today I am joined by Gerri Detweiler, who is going to talk about a topic that we haven't talked about on this podcast before. Hopefully, I got your curiosity up. And our topic today is going to be those financing traps that just kill your profit margins. So, with that, Gerri, welcome to the program.
Oh, thank you. Glad to be here, Diane.
I am looking forward to this topic because over the years, I've seen my own clients get sucked into those traps, those quick loans that demand weekly payments and at ungodly interest rates and things like that. In fact, I've had a client not too long ago, they got sucked into those and just about put him out of business. He couldn't get ahead of it and because it was just so brutal and grabbing all of his working capital just to keep those payments made every week. So I've had that happen to a couple of my clients, and obviously they didn't come talk to me first. They went straight out and got the loan, and I found out about it when it landed in their bookkeeping information. Like, where did that come from? And
Yeah,
so let's dig into that topic a little bit. I'll let you give a little bit of backstory on what you see, and we'll go from there. I know
sure.
we'll find
So,
some great profit leaks.
yes. So the type of financing that you're talking about is something called merchant cash advances, but the whole business cash advance world comes in several different flavors. And if you have a business, I would almost guarantee that you are going to get these offers in one shape, form, or another. If, let's say, for example, you accept PayPal from clients or service providers, or whatever, or Amazon, or you just take credit cards from your customers, which is, pretty common in the home service industry, then these companies will say, hey, if you need money really fast, we will advance it based on your past sales history. So they're looking at your past sales to predict, your future sales, and then they'll give you an advance on those future sales. And then what happens is when money comes in, whether it's your customer swipes a credit card or, pays you by PayPal or whatever it is, then they take their repayment right off the top as often as a percentage of the sales. And again, that can happen on a daily or weekly basis, occasionally monthly, but it's usually more frequent than that. And there are two big traps that business owners fall into here. One is, technically these are not loans, they're advances. So they don't have to follow all the same lending rules that, other more traditional loans would follow. And one of the things they do is they usually express the payback in a dollar amount or in a factor rate. So let's say the factor rate is 1.2. That means right the moment you sign and say, yes, I accept this advance, you're on the hook for 1.2 times the amount advanced. Now, in your head, 1.2 probably sounds really good, right? It sounds better
Yeah,
than your
that's
19.8% credit card rate, right? But when you compare it to the annual percentage rate, which is what we're so used to in the consumer world, because every loan we get as a consumer has an APR attached to it, you can see that sometimes that the equivalent APR is sometimes 35, 40%, 50. I've seen higher than 1,000% on
oh
some
my goodness.
predatory advances. And
Oh
it's
my
just
goodness.
not always apparent to you as, the business owner who's getting this, type of financing or type of, I guess, advance for cash flow purposes. So I would say, that's the number one trap is the cost is not apparent. But the other trap that really ties into what you do in terms of looking at, profits is that those daily or weekly payments, a lot of times you think about the money you're getting, but you don't think about how that repayment will affect your cash flow. And if you're not crystal clear on that, then what happens, and this is where the trap really comes in for a lot of business owners, is then the next amount you get from that client who swipes that credit card is not as much as you thought, because part of it's going to repay that advance. And so suddenly you're having another mini cash flow crisis, with the next payments that come in. And so then what happens is business owners often turn to another advance. So then you're rolling that into another, and so on and so on. And so it gets really expensive. So I'm not saying every advance in every situation is definitely a no-go, but I do think what happens often is business owners go in without really fully understanding this, and also without really fully comparing their options so that they can see, hey, maybe there's something better that even if it doesn't look really cheap to me, it's still a lot cheaper than the financing that I'm being pitched for a quick
Right.
resolution.
I had a client who took one of those loans a couple years back, and he had the cash within about a month or 6 weeks to go ahead and pay it off. So in
Mm,
his mind, I'll just pay off the advance. And he did. And
mhm,
they continued to take money every week. And they explained to him that I don't care that you paid it all back. You, in your small print of your agreement, you will pay X amount in interest or those fees, and
mhm.
you'll pay all of it. And
Yep,
so they ended up sucking money out of his bank account for another 3 or 4 months before they got all their fees out of him. He was shocked, but he didn't read the whole agreement. He got fixated on, I need this amount of cash today. And
yep, yep.
that's
And,
all the
and to
further
be
he looked.
Yeah, and to be fair, it's confusing, right? So, I mean, all of the financial stuff all can be confusing, but this is confusing. And the agreements, it's not always clear in the business owner's mind, right? Because
No,
the fee or the cost, again, it might look reasonable, but when you really turn it into the comparable options, you may be paying too much. And like you said, you can't refinance your way out of it. You can't really,
no, you
because
can't.
you
They
owe that
try.
owe that full amount
Yeah.
up front, right? So
Yes.
you owe that amount. You have to pay that back, and no matter whether you pay it off early or even try to get some other type of loan to pay it off, you still are going to owe the full amount that you agreed to pay, which includes that full
All those
factor
fees.
rate
Right.
amount. Yep.
Yeah. The last two that I've seen ended up being between about 33 and 40% in
Yep.
interest. And when I took what they got and their repayment terms and I put it into a traditional amortization schedule
Mhm.
so I could show the client the interest rate they were getting, one of them in particular was just adamant. I'm only paying this point whatever, whatever that percent was. And it's like,
Mhm.
no, in reality, no, you're not. You're paying this amount.
Mhm.
And this is why it's taken us so long. It's so hard to get this thing paid off. It
Yep.
would have been so much better for this client if he would have understood his numbers, allowed me to help him get his business in a point where he was credit worthy with a bank, and then be able to get a credit line or something similar like that because he just needed a short-term band-aid for about
Yep.
2 to 3 months was all, and
Yep. Yep.
paid dearly for that short-term band-aid.
Yeah. And sometimes, there are alternatives that may not be the cheapest out there, but that are available. For example, even a credit card. Again,
Yes.
19.48% interest for a few months might be cheaper than
And
than one of
40.
these types of options. And I'm not
Right.
saying that that's always the best solution. So, I love what you're doing to help your clients understand the full picture. But there are times when businesses, are in a cash crunch. And when that happens, if you wait until you desperately need that money for whatever reason, that's when you tend to end up with, pitches or offers that aren't necessarily in your best interest, but solve the immediate pain point, right? So then the pain comes later because it's deferred down the line.
Yeah. Yeah. I always call those emotional decisions instead of logical decisions.
Mm, yeah,
You're backed in the corner, you can't see a way out, and so your emotions take over, the panic sets in, and I can't see any other way out, so I will just do this. It'll be okay.
yep,
And they just do it.
yep,
Versus sitting down maybe a month or two before this is going to turn into I'm backed into the actual corner and I can't get out, and exploring what other options that we have. Sometimes we can sell off some unused inventory that's sitting around and solve the problem, but they don't
mhm,
realize that. Sometimes they might have an extra vehicle in their fleet that's not being used on a regular basis. short-term financing, we could sell that and pull that money back in and then replace it down the road if needed. But there's other options when you're not backed so tightly into a corner.
Yeah. And I actually like business owners to think about this not even a month or two in advance, but when they're doing well, because the honest
Hmm.
truth is banks love to lend you money when you don't need it, right?
Right. Yes.
So if you want a bank line of credit, for example, which could be one of the lowest interest rate products
Mhm.
that you may be able to get, the time to do it is when your revenue's good, your financials are strong, you're on the upswing and not the downturn, and then it's there when you need it for those
When you need it.
short-term,
Right.
cash flow gaps. That's a tricky because I think a lot of us feel like, we should be able to bootstrap things. We shouldn't have to borrow money, right? We shouldn't have to rely on a lender. But a lot of businesses run into scenarios where it's really helpful for them to have that option.
Right, right. And building out that relationship with your banking or your banker, depending on where you're banking at, can be invaluable over time because now you've got that unused line of credit sitting there. Use it for 2 or 3 months, whatever you need, and then pay it back. And now it's sitting there ready for you again. Or an even better situation or strategy would be to implement profit first in your business, and we set up an emergency fund. And in that emergency fund, we're funding it every single week, dropping money in the account. And when you get into those cash crunch times, you can borrow from yourself and then pay it back when the cash becomes available. And I really like to see my business owners using that angle a little bit more so than feeling like I've got to grab a quick payday type loan and
Yeah,
I'll just deal with it
absolutely.
later.
Yep. And I want to be a little controversial here and suggest too that there are even some credit cards that may be useful because
Yes.
there are about maybe 10 a dozen right now, small business credit cards that don't show up on your personal credit that have long 0% APR intro
Mhm.
rates. Let's say as much as, 12 months, even a little bit longer. And so I think that's appropriate in a very specific situation. It's not something where you just want to throw expenses on it and then suddenly 11 months later, you're like, how am I
Yeah.
going to pay this back? That's not
Right.
what I'm
Yeah.
suggesting. But for planned, purchases that you want to finance over time, if you don't qualify for other, more traditional financing from a bank, that might be an option that could be viable to give you that, interest-free financing. Now, my tip there is, and I know you would absolutely work with your clients to make sure this happens, is to set aside, the amount you need each month or to make the payment each month that would pay it off before that intro rate expires. Because if you
Right. Yeah.
wait till the end and you don't pay it off, the interest rate's going to go way up, and
Right.
you're going to end up with a pretty high interest rate on those purchases. But if you can finance that and manage it properly, that may be another viable option as well. And most small business credit cards are available to even newer businesses as well as established businesses, but they do typically check personal credit and they
They do. Right.
do typically require a personal guarantee. So this is something you really have to make sure you feel confident that it works with your other financial plans so that again, you don't end up with debt that you can't pay and
Mhm.
then you're stuck with that eventually coming to you personally.
Mhm. Wow, so much to think about. And here we think we're just going to go run our small business and we're going to fix roofs or fix
Mhm.
electrical problems or unclog drains or whatever it is that we do.
Yeah.
And we have all this other stuff swirling around in the background that we have to take into account and deal with on a daily basis.
Yeah.
And a lot of this comes back to not understanding your numbers, not realizing that there's warning signs when your business is starting to head into the direction that you may need some short-term help. There's warning signs. But if you don't understand your numbers and you don't know how to read your financial statements and you're not having regular meetings with your bookkeeper, your accountant, and you don't have a profit or business coach on your team, then sometimes you're so busy that you disregard those warning signs. And then you end up backed into the corner and making that emotional decision. So we like to prep people ahead of time so that that doesn't happen to them and help them understand that they do have choices that they can make other than just the I don't know what to do. I'm going to have to just do this.
Yes, whoever calls me and offers me financing. The
Right.
other thing I've been experiencing lately, and I don't know if you've been targeted by this, is I get literally, if I could show you my phone, I have 175 messages from companies saying that I'm eligible for all this funding coming
Yes.
every day.
Every day.
If I answer them, I'll get the most, they end up hanging up on me because I ask so many questions and they're yeah, bye. We're not interested in you. But usually it's 100, it started out at 138,000. Now it's up to 200 and something thousand that they say is available. Just need to finish that loan application. So,
Right.
there are also just outright, I don't know, they might be a broker, but I can't even get any kind of broker information from them. So I'm not even sure if it's really just a scam or if it's trying to
Yeah,
feed
you don't
me
know.
into
Yeah.
high cost financing because I don't get that far because again, I ask too many questions
Right.
before I'm willing to share any information. So
Yeah.
that's another thing you have to, really watch out for.
I
And
get
then
in my
go ahead.
email
Oh, okay.
every day. There's probably a 20 or 30 of them in my email every day. And it's like delete, 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 delete. I'm not giving you any of my personal information.
Yeah.
Like, no, I'm not that brave.
Yeah. And you can't stop them either.
No, they just keep coming and coming. And sometimes it's the same person 3 and 4 and 5 times in a day. It's like, go away, you pesky little gnat. Go away.
Well, another thing that I like to educate business owners about, and this is probably related to some of your clients who are more, profit first centric. They aren't necessarily looking to borrow money in the near future, and that is the whole concept of building business credit for their business, which in turn, when they do need financing, or even if they don't need financing, can provide some potential advantages. And I'll give you an example. One is if you decide to get into government contracting, you're shopping for business insurance, you decide to go for larger commercial clients. In those cases, it's not uncommon for them to check your business credit. And my experience has been that, many business owners just don't have this on their radar. They don't know what's in their reports. They've never seen it. And sometimes information gets mixed up, mistakes happen. It's not nearly as transparent as our consumer credit reports are, where we all have apps that we check it, right? At least periodically, or our bank will give us a free credit score, whatever. It's not as transparent on the business credit side. But having strong business credit then in turn may open up other opportunities. So when you decide, hey, I am ready for that line of credit, or maybe I decide I want to finance, a shop, so I have a physical location for my equipment and tools, then the business credit may help you qualify for better financing than if you were just going in with just your personal credit alone. And even with the business financials, just having that personal credit piece usually means fewer options.
Right. And to build up your business credit, just like your personal credit, you use credit related vendors and things and you pay them off quickly.
Yes,
So if
yes.
you pay, I have quite a few clients that pay a lot of their monthly ongoing expenses with a credit card because they want the points, and then they pay it off every single month. And
Right.
so
Yep.
that's one of the ways that you can really build that business credit is by that constantly paying it off every month, not letting it sit there and accumulate and grow. But
Yes.
similar to your personal credit, your business credit is very important. And to be able to have here again that relationship with your banker that you can call and say, "Hey, Bob, I'm looking at such and such a piece of property so we can put on a shop or whatever for our business." And they can give you kind of a thumbs up without you ever having to fill out paperwork. Then you
Yep.
know, okay, we'll go ahead and we'll start pursuing this. Or they give you the wait a minute, no, no, that was not a good one or something, and because they know your history and they've worked with you over the years and that type of thing. That's invaluable to have that.
Yeah, and one of the keys to getting better financing is to really have strong, financial data that's up to date. And I will tell you, Diane, I mean, I'm sure you've encountered it too with new clients where, information is just not kept current. And so they don't have the documentation that lenders may be looking for. I always say in the small business world, it's a little bit more like getting a mortgage than getting
It
a
is.
car
Yeah.
loan. A car
Mhm.
loan, you just go in, they pull your credit, they, ask you where you work, they verify employment or pay stub, and that's about it, right? Business credit and credit for your business is more like that mortgage scenario
It
where
is.
they want to see a lot more information and
Yep.
documentation. And the more organized you are, the easier it is to provide them what they need so they can make that decision more quickly and help put you in the right product. When you don't have that up to date, that's when I think people end up in this back against the wall situation where they end up with, okay, well, this guy's telling me you can get it just based on my credit card receipt. So that's easier. So I'm going to go with that because I don't have an up to date P&L or I don't know how to do any, my bookkeeping's too far behind. So all these things that you talk about, that I talk about, all tie together to
Yeah.
help make it easier for the business. I mean, it's not, for most businesses, it's not the fun part of running a business, right?
It's grind.
It's not
And
getting a new sales. It's not even
no.
doing a good job and having that client say, thank you so much. It's instead, it's that eat your broccoli stuff, but it's what makes your business
Mhm.
healthy.
It is. And it's so needed. And I will just definitely echo what Jerry said. Keep your books clean and keep them up to date. Have your in-house bookkeeper or your outsourced bookkeeper keeping it done every single month. Don't let it lapse into quarterly because then you start forgetting what certain receipts were for. Hmm. And it just the water start getting muddy. But if you keep it done every month, then it's easy to have those numbers when your banker needs them.
Yeah, absolutely. And so if we just go a little bit back to the business credit, one thing you mentioned that I wanted to emphasize was the vendor relationships. Because there are that is a type of credit that business owners aren't always super cognizant about, and sometimes it can be your best lender in that what happens is they will let you get the items you need and pay for them in 30, 60, maybe even 90 days. If you have a really
Yes.
strong relationship, you're paying on time, you have good business credit, and that's a cash flow tool as well as often a business credit building tool. If that vendor reports to business credit, you're paying on time or even paying early, that can help you get a better business credit score, which in turn, opens up those doors to greater opportunities. But it's one of those things until you're in business and you don't really focus on it, you may not even really know this is an option for your business, or you may not realize how it can fit into improving your cash flow without taking on a lot of debt.
Right. It's something I want to bring up because we have a lot of younger guys and gals in the home service world in their 20s and 30s or whatever, even early 40s, that they're so used to doing everything through an app that they're not building out that relationship with their various vendors, with their bank, with things like that. They've just, everything is behind the shelter or the screen of your computer.
Right.
And versus the old days when we walked into the bank, we met with our vendors, we got to know them. And I
Yeah.
think they're missing that piece of it. Um, and that personal side can go a long ways when you're needing to say, hey, Mr. Vendor, I know I always pay you in 30 days, but for this one time, is it possible? Can I string it out to 45 or 60?
Yeah.
And if they know you and you've got a good history, most of the time, not always, but most of the
Mhm.
time, they'll say, sure. And then you have a little bit of breathing room there that you may not have had otherwise.
Yeah, absolutely. I agree. And that those relationships are still very, very important, especially as you say, if there's a cash flow crunch. And a cash flow crunch sometimes comes out of your best clients. I'm not in the home services business, but I've been in the consulting business. And I will tell you, the bigger the client, the longer they take to pay. And so if you land a larger, say, commercial client or something like that, the chances are they're going to take a little time to pay the invoices. And so you've got to figure out, okay, what do I have to pay for, what expenses do I have? How do I manage that so the payment comes in? And how do I manage that payment not coming in so quickly so that I don't end up taking on high cost debt that, affects my margins? And that's often for many business owners, that's kind of a painful lesson. You
It
usually learn
is.
it, right?
Yeah.
School of hard knocks.
Yep.
Um, because you learn it after the fact. You're so excited to work with this client or this customer, and you don't realize what that means for your cash flow. So, like you said, these relationships can make it a lot easier to navigate those kinds of things when cash flow isn't coming in as quickly as you'd hoped.
Yeah. I know one of the biggest expenses is payroll. And
Mm-hmm.
oftentimes it's every week or twice a month or whatever it is. And having how many payroll cycles are going to hit before you're going to get paid
Mm-hmm.
from that larger customer. And
Mm-hmm.
factoring that in up front, making
Mm-hmm.
sure you've built in a little extra room into your pricing so that you can carry that payroll. If it's one or two or three cycles or four cycles, whatever it needs to be, that you're prepared for that and
Right.
it doesn't completely knock you sideways in your business because you weren't thinking about that side of it.
Yeah, and payroll is one of those expenses that you really need to plan for and have the cash available for because your
Yes.
payroll company isn't going to let you put your payroll itself on the credit card, right?
No,
You can put the
no.
payroll fees probably on the credit card, but that's a minor expense compared to your actual payroll. And
Right,
so that's where you prioritize things and say, okay, what else? Can I ask my vendor for 60-day terms so I can complete this and I have a little bit more room before I have to pay that expense. And often vendors operate with no interest. You may forego a discount. Like if you were able to pay, say, in 10 days, you might get a 2% discount, for example. And so you might forego that discount, but you don't necessarily have an interest charge that gets added to that invoice from that vendor. And so that's another way to think about this. So one thing I encounter, and Diane, I don't know if you encounter this with your clients, but a lot of times, people think I'm just going to get a small business loan and it's going to solve X.
all my
And
problems.
and really, yeah, and besides not solving the problems, but a lot of times business owners use a variety of different types of financing for different types of needs over the life of their business. So, they might use vendor financing in certain cases. They might need to tap the line of credit in certain situations, or they might look for that bank loan or even like an SBA 504 loan, which can be great loans for that shop that they want to build, right? So there's different types of financing that serve your business at different times. But the common denominator with all of them is, are you credit worthy and can you demonstrate the cash flow to pay back whatever it
Right.
is that you're taking out?
Yeah.
And that's where your numbers and your financials come into play to demonstrate that to the lender, the financing company, so they can see that, yes, you can afford to pay this out of cash flow.
And I like that you really kind of expanded on that point because so oftentimes I hear the guy say, "Oh, I can afford the payment. I can afford that payment. I
Right.
can afford that payment." And pretty
Mhm.
soon their monthly outgo on payments is a big number. And now we haven't factored in their overhead costs, let alone their job materials and things like that. And you see a business just struggling because they've got too many payments out there. I see it
Right.
a lot because they'll go out and they'll buy several vehicles
Mhm.
and they'll finance all of them.
Mhm.
Where in my Profit First program, we teach them how to save up, and at least they don't have to borrow as much if they may not be able to pay
Mhm.
full cash for it, but they don't have to borrow as much, and we
Right.
can keep those payments to be a little bit lower. But that whole thought of I can afford that payment, yeah, but you've got three others in addition to that.
Mhm.
Can you
Mhm.
afford that payment
Mhm.
and not
And
just
you can,
looking at them
and
one at a time?
yeah, and the idea is you can afford it right now, but what happens when a client pays late? Well, it doesn't pay at all. I mean, that happens, right? I've had
Or
it happen in my business. And
yeah,
so you don't get paid for something that you expected to be coming in. Then what do you
it
do?
happens. Yeah,
And I love the idea of if you can just set it aside. So even if you decide they offer you some killer deal on financing, you still got the money there, right? You're just taking advantage of
right.
the free use of their money for that time so you can park it somewhere and have it available. That's a lot better position than to be in then a situation where you're really panicking because you don't know how you're going to make the payments. And unfortunately, it's happening a lot right now with the economy the way it is and with the struggles that certain businesses and customers are going through. So the more you're in a position where that you feel strong about it, the better. But it takes steps, right?
It does, yeah.
So if someone, if someone's listening to us and saying, well, I'm not there yet. So, the steps that I would say would be getting your numbers clear, which is exactly what you focus on. Your bookkeeping's up to date. You understand your numbers. You're setting aside, your savings, but you're also trying to, build credit, both your business and personal, because the honest truth is, first few years of your business, they're going to want to check your personal credit. I mean,
Yeah.
that's
You
just
have to guarantee everything.
yeah, that's just reality. And then as you build your business, you hopefully can move away from that, but that's very, very common in the beginning. So you're looking at your credit, you're monitoring your credit, and then you're looking at financing options before you need them so that you're, again, can take advantage of the really good deals
Mhm.
and avoid the scams and the high pressure deals that may come in when you're really desperate.
Yeah. I've seen, and you probably have too, if you think back during COVID when the supply chains started breaking
Yeah,
down and the mad scramble to get products. And normally I would buy three, but because it's so hard to do it, I'm going to buy 15.
right.
And that cash that took back at that time.
Mhm.
Or one here's a little bit more recently is had a solar company, and last year the Congress and the IRS changed that whole solar credit for individuals. That impacted their business dramatically.
Right.
And so now the mad scramble of how are we going to make up this income that we don't have coming in now that we've always had coming in. So those kinds of things can take a business from just kind of, bobbing along doing pretty well and all of a sudden is what just happened. And I wasn't prepared for it. And
Yep.
now if you're not credit worthy when one of those things happen, you find yourself back in that scenario that we talked about at the top, at the top of the show.
Yeah, yeah. So if you have no idea what I'm talking about when I say business credit, and you have no idea what your business credit score is, I would encourage you to check it. NAV is the right now, like Credit Karma, the place to check it. You can get free oversight and then detailed credit reports for a paid product. But check it with, Dun& and Bradstreet, Experian, Equifax. Those are the three main bureaus, and they like your consumer credit, they don't share information with each other, but typically, unlike your consumer credit, they're often very different. Your consumer credit, you have good credit with one bureau, you probably have good credit with the others. And that's not
Not
necessarily the
so much
case
in
with
business,
business
yeah.
credit. It can be really, really different numbers. And so I would check that and then keep an eye on it so that you can either work on it if it's not strong, or at least monitor if it is. So just like your consumer credit, if something happens, something, whether it's fraud or just
Mhm.
a payment that didn't get applied as it should have or whatever, then you can act quickly and, try to straighten it out so it's not long-term damage to your
Right.
business
Yeah.
reputation.
Wow. Well, listeners, I hope you've been taking notes. Here's another one of those really great topics, one that we don't think about enough. We're busy, we're putting out fires, we're leading our teams, we're selling, we're giving our customers the best service we can give them. And sometimes these types of ideas and these thoughts, these topics get pushed to the back burner. I'll work on that later. And later doesn't come because we're so busy. So hopefully you take a few minutes today and check into your business credit. Find out where are you? How are you looking? Are you credit worthy? Have you had a conversation with your local bank, whoever you're banking with? And I have seen over the years that more my clients seem to do better at the community banks more so than the big nationwide chain banks because you actually get to know a person and that person has some input on your ability to borrow and those kinds of things versus a big national chain which the decision is made in some other state by a group of people that know nothing about you.
Right.
And so you start setting yourself up so that you are credit worthy if you aren't already. And for those of you who are credit worthy, make sure you're being responsible with it and putting yourself in the best position so that as unseen things come up, which has been happening a lot in our economy the last several years, that you're positioned in a place where you can ride it through without getting backed into that corner and then having to make those hard emotional decisions that aren't necessarily the best ones for your business.
Yeah.
Jerry, we're coming up on the part of the program where I like to ask my guests if they have a hidden or unique profit leak that they see when they're working with home service business owners that they'd like to share.
I think in my field that the hidden profit leak is not leveraging the success of your business financially. So what we've been talking about, you fail to leverage that purchase history with that vendor to get better vendor terms. You fail to leverage your credit history that you worked hard to build, business or personal, to get that 0% credit card when you need it, for example, or to get that line of credit that you need. So, if you've done things well and you're doing things right, own that and use it. It's
Yes.
worth money. It's worth money to
Yeah.
your business by building those opportunities so that you get the best deal possible.
And by building out those opportunities, you are saving a potential profit leak from a business who's done well, but they've been totally cash only for
Mhm.
all the
Yeah.
years they've been in business. So when you
Mhm.
go to pull a credit score on them, they don't have the score.
Mhm.
And now that costs them a lot higher interest rate and other financing charges that get added to it when
Mhm.
they do have to take a loan of some sort. And so that becomes a profit leak because, of course, we're going to pull this back into profit leaks here.
Right.
And we don't want to see our businesses bleeding profits out for the sake of cash flow in because we can help them become credit worthy and be able to take advantage of those better credit type situations and products that are out there.
Yeah, I love it. And I love what you're doing to help them.
Yes, it's so much fun. I get so excited when we're able to put money back in somebody's pocket, drop it to their bottom line, add it to their profit account. Those kinds of things are just so fun and so rewarding, and the clients love it too because most of the time it's something they've never really thought about. That if I do this instead of this, it will save us X amount of money.
Mhm.
And then we can start working with that number and start allocating it, and they get rewarded for making great decisions. So,
Yeah, and they get to work with someone who actually likes this stuff if they don't love it.
right, right, because I am a numbers nerd.
Not everyone loves it.
No, and I know numbers come really hard for a lot of my home service owners, but
Mhm.
it's okay because they've got somebody walking next to them who is a numbers nerd and
Yeah.
who's willing to help you dig into those numbers and be the interpreter because sometimes in the numbers in the financing world there's all these terms being thrown out and they're like,
Mhm.
I don't even know what you're talking about. It's okay, we can be the interpreter and kind of be that liaison between you and your bank and help build out that relationship a bit and kind of educate you on here's the things a bank is looking for. There's certain ratios you have to meet. You have to show that you got a certain amount of equity in your business, just no different than buying a home. You know, you have to have a certain amount of money down, or if you want to refinance your home, you have to have a certain amount of equity in it. A business loan is no different than any of that. Some of the terms are different, but that's about the main difference. And so making sure that our clients come across to their financial vendor, whatever that might be, that they are credit worthy and that they get the best rates possible so that we're not spending more money than we have to spend for them to continue growing their business and meeting their goals that they've set.
And you don't have to, the good thing is you don't have to become like a credit expert. You don't
No,
even have to become an accountant, right?
no,
You
no.
let someone else guide you through it. And I love your example of the interpreter. I think I'm going to have to use that in the future to talk about being an interpreter for all this because it's confusing. It
It
really is.
is.
And I will tell
Yeah,
you, even if you check your credit, personal credit all the time, and then you go to check your business credit, you're going to be shocked because it's going to be a completely different experience. I mean, just one example, they don't list the names of the creditors that report. So it
no,
will say you have a bank card. It will say you have maybe a communications account, with your telecom. It won't say who it's with. And that can be very confusing, especially if you have multiple, credit relationships. So I love the idea of interpreting. And I hope you don't mind me mentioning I have created a free guide that
you
walks people
bet.
through how to build business credit. It's at nav.com/Gerri. That's my first name, G, not J, Gerri. So nav.com/Gerri. And there's a free build business credit guide. I, I'm sure you feel the same way. I don't want this to become all consuming for for business owners. I want this to be just something they develop, and it's a tool in there
Mm,
so they can focus on what they do best, which is, the
right,
best client jobs and services that they can provide, right, for their customers. But they don't have to become a, business credit expert just to build
right,
business
right.
credit.
As you were talking about that, I was thinking, when you're on an airplane and they tell you to put on your own oxygen mask first,
Right,
so if your business isn't healthy, if you haven't put on your own oxygen mask first, you can't give that level of care to your customers and to your employees.
right.
So taking care of your business, taking care of yourself, and learning enough that you can navigate this part of being in business and not feel terrified by it or totally confused by it. And there's all, there are experts out there like Gerri or even like myself that are willing to be there and walk this road with you because we've done it for lots of people.
Yes.
So,
And
yeah.
then when those scammers call, you can start asking questions and they'll leave you alone for the moment.
And they hang up on you.
And then they change their number and call again. But
Yes. Yeah. Gerri, what's the best way for somebody to get a hold of you outside of downloading the guide that you mentioned?
yeah, LinkedIn is a great place to connect with me, and I love to connect with small business owners there. So I am Gerri Detweiler on LinkedIn, and I'm always happy to connect.
Very good. Thank you so much. So, listeners, I hope you found some really great value in today's episode. If you did, would you please like and subscribe? We love when we get great 5-star reviews. All those things help us get the show out in front of other people and allow more home service business owners to step in and start realizing some of these profit leaks that we've exposed over the last few years. Because there's been some really good ones, some very creative ones. If you're new to the podcast, thank you for listening. We see that you're out there. You're downloading those previous episodes. Thank you for doing that. You're helping us grow our numbers, and I am pleased and honored, that you've chosen our podcast. So thank you so much for that. And with that, we're going to wrap this one up, call it an episode, and we'll see you guys on the next episode. Bye bye for now.